Welcome back, baby dolls. Today, I'm going to show you something interesting. One of the many sources I follow in crypto space is Crypto Banter. And I'm just going to read you a tweet here I made on my Twitter. By the way, definitely follow if you haven't. So, Miles from Crypto Banter has a portfolio for audience to track and follow and participate in crypto. It is currently 86% stablecoins. That's right, 86%. This portfolio is deeply sidelined and bearish. He said he will DCA in the next 6 to 9 months. Most market participants in this same position. And I have the picture here so you can observe. You can see it right here, 86% stable coins. And then the others are negligible, right? 1% Chainlink, 1% Lido. So if you're new, once again, I'm going to remind you, we are friends. And I'm going to give you knowledge from the banana tree. And let's go have a look at the banana tree. And there's going to be a banana emoji right here to signify we are getting knowledge from the banana tree. So when you come into the world of investing, you probably think the right moves to make are the moves where everybody's agreeing with you. And that is the opposite. The opposite. So look at this banana. You follow this banana. There is a time when the crowd is right, and there's a time when the crowd is wrong. The crowd is right in the middle of moves, because the crowd is just describing the colors of the candles. If I change these candles to Heikin-Ashi, we can get a better idea, right? And let's even make this like a 2-week. So the Heikin-Ashi just takes the average of the open and closes, right? So you can see when we started going red, a lot of people are like, pain, 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 pain. So this is something I'm just sharing with you. So you've leveled up. The crowd is great in the middle. But once you start hitting extremes, the crowd is not good at all. The crowd is very, very, very wrong. And luckily for me and you, the extremes is where the most money is made, because that's the turn. So I have a 10-year HODL plan, but if you have any money to deploy, and you have just seen 86% come on your radar, you now have to say to yourself, wow, I wonder what other portfolios out there are like. And because we're friends once again, I'm going to tell you right now, I follow so many people, he is not unique. I think the most bullish, the least bearish, most bullish person, I'm thinking of him right now, they're about 50 to 60% in Bitcoin. So they're only like 40% stable coins. So Miles is 86% stable coin. So basically he's 14% exposed. And someone else who I know is the really like, I consider bullish, they're like 60% to 40 to 60% exposed. So you have to think, after such a long, vicious series of red candles, what comes next? Everybody's scared that another big fat red candle is going to come. It's okay. We know this can happen. But on these extremes, this is why markets are fun and why they're difficult and why they're a moving chess piece. Because when we turn, it turns fast. Right? It starts off slow, it turns fast. And before you know it, you're like back in the middle of the range and you're like, huh? How'd that happen? And most people, they actually sit in denial after this point. A lot of people with their portfolios, they get accustomed to these low prices. So where the banana is, right? Bitcoin 15K to 18K, And this obviously applies to Ethereum and altcoins even more. Okay, so we're just using Bitcoin as a proxy. So following this banana, people get accustomed to there's someone out there with $100,000, right? And he's thinking, he's not buying here, by the way. He's thinking about 10K. I know firsthand, I can name more than 4 people, different influencers, Twitter, YouTube, you name it, 4 people I know off the top of my head who have a $100,000 US clip ready for 10K. And I already know what they're thinking because they don't say this, but you know, man, it doesn't take a genius to figure it out. They're dreaming of having 10 Bitcoin that you own at 10K. So they want 10 Bitcoin at 10K to ride to 100K. 1 mil USD profit. That's what they want. That's what they want. So I want you to think of this. This is what they're dreaming about. They want to buy 10 Bitcoin at 10K. They want to ride it to 100K Bitcoin price. What do you think is going to go through their mind when Bitcoin's at 25K? They're going to be thinking, what? I can't buy 10 Bitcoin anymore. I can only buy 4. And I'm not going to make my million anymore. I'm only going to make 400K. That is an enormous difference. I sat through this same experience here. And it wasn't me because I just was like, I'm all in. We got the capitulation. Everybody's out. Everybody calls me a tard. Everyone says we're going low, we're going to zero. I came in, I go, you know what? You're all out. None of yous are bullish. I'm the only tard coming in. Everyone's lost their money. No one wants to look at crypto anymore. Bang, this happened. I didn't expect that to happen, but it did. I now see the same patterns. I see same feeling. Everyone's embarrassed to be a part of the industry. But here's an interesting part. I know firsthand there were people who were ready for 1K Bitcoin. Right here. People wanted 1K Bitcoin, alright? I know people that had, instead of 100K, they had like 10K. They wanted to buy 10 Bitcoin here for 10K. What do you think went through their mind when Bitcoin was up at 10K? What do you think went through their mind? Their $10,000, instead of buying 10K worth, 10 Bitcoin, now they only own one. So that's why this rally went on so far. It was so hated. It was so hated. And, we did pay the price for it later with a lot of this sideways. But this was hated. This was hated. But, these ideas and talking in hindsight doesn't really mean shit, man. We want to know what comes next. And you don't have a guarantee, but I see the same setup. It's beautiful. Psychological numbers. Everyone's dreaming about 10K. I'm seeing so many influencers, man. They're stacked with stable coins. And to be fair, they have a plan. The plan is, I'm going to dollar cost average over time. I'm going to dollar cost average my little banana. I'm going to dollar cost average over time. But you have to know how humans operate. People say DCA, dollar cost average, they say it as a soundbite. Most people don't actually practice it. There's been reports from many of the exchanges and the CEOs and stuff. The people who practice it are the people who do it automatically. But most people, they don't. You got to think, man, if Bitcoin actually, if Bitcoin is like by May or June next year, it's back to like 29 or 30K. Do you think those people are going to be like, yep, we got a DCA? Because when they talk about DCA, what they really mean, go and listen carefully, get your ears out, listen carefully to all the influencers talking about DCA. They always say the same thing. They always say, I want a DCA at the very, very, very bottom, right, in a tiny little zone, and I don't want to take any heat, and I want to pick the exact bottom. That's what they actually mean when they DCA. But DCA, the philosophy behind it has nothing to do with that. That's timing the market, man. You may as well do a leverage trade if you're going to do that. DCA means, this is what DCA means. DCA means, I have a heart attack today thinking about what the market's going to do, all right? I get a heart attack thinking about it. Well, I don't know what it's going to do, up and down, up and down, up and down. DCA means one day the earth will have spun enough times and we will actually be in the year 2025 and then 2026 and then 2027. All right, the calendars are gonna go by. We're gonna be there, and all these prices have been accumulating. They're not gonna matter right now. I just need exposure. That's what DCA means. Every incremental bullet I add, whether it's 15K Bitcoin, 10K Bitcoin, or 35K Bitcoin, or 40K Bitcoin, and the equivalent prices for Ethereum and Chainlink and everything else, all your altcoins, That is where the philosophy is coming from. They're talking about the people who are really talking about DCA. This is what we mean, right? This is what we mean, and this philosophy would have helped you back here the whole time. You know, like let's say you really wanted Bitcoin at $5. Let's say Bitcoin's at $5. Now it's at $10. There would have been people wanting $1. You know, but the people who DCA, people who say, just be willing to accept in your heart. 1, I don't know what's going on. 2, the game is rigged. 3, expect the unexpected. 4, I don't plan on dying in the next 10 years. Just accept all of those in your heart. And then the final one, 5, I just need exposure. That's it. I need any exposure at any price. If you have that mentality, you're the guy, when Bitcoin goes from $1 to $10, you're the guy saying, I surrender to the market. I surrender to optimism for the future. I will just keep DCA buying. And you're the guy who buys it at $18, $40, $50, $100. You're the guy, man. Or girl. You are the person buying it here. And you're the person who, surprise, surprise, you're not dead by the year 2017 and it's up to 10, 11, 20K. Right? Now, these multiples, maybe they're not going to be as extreme in the future, but what if they are, man? What if they are? What if they're just a fraction of that? Still better than nothing. So the person buying at 15, 20, 30K with the mentality of like, you know, one day it's going to be the year 2029, Bitcoin will be maybe 300 to 400 grand, and all these bullets meant something. But that person sitting on the sidelines thinking about, oh, I'm going to have these stable coins, this and that, they don't make it. Some of them do, and you have survivorship bias. So some of them do, and they come and they gloat and they say, yes, I timed it, I'm the best. But what you'll find is they go through periods of being hot, up arrow, and cold. I track over 50 sources of people. I have my own way of tracking them, different social medias. I know their personalities. I even know people better than they know themselves. It's funny enough. And the hard part is they're just like hedge fund managers. They have periods where they're winning and there are periods when they're losing. And you know who comes on the radar? The guys who are winning like 80% win rate. They come onto your radar. That's when they get popular. And then you have to always think, uh-oh, this guy's been on a hot streak for like 3 to 6 months. He's probably going to start losing soon. Right? And there are people who you don't take them seriously for a long time, and eventually they get like a big home run, you know? So, but that's why. If you're going to play with this portfolio, back and forth, stable coins, you need a proper system. You can't just say, oh, I'm just going to take it easy and DCA, whatever. You need actually like, you know, at least have some basic indicators on your screen. I'll be doing more of this in the future, just so everyone has a basic idea of what you're doing. But I will always advocate, always, hedge against your failures. Do 90 to 95% for long term and play with the last 5%. Maybe 5 or 10%. Just play with that part, because you know what I always say, if you're really good, you will turn that, say, 10% portion, you will increase it to 20 or 30%. And if you can do that, then you can start drawing money from your capital, from your cold wallet. Only then after you've proven it to yourself. Don't start this whole game of like, I'm a genius and I'm going to kill it. Because now you're destined to fail. Because, look, the chart's going to go up, but are you going to be long? You can't guarantee me. Like, this is why I don't tell people to keep timing stuff. I know, man. I know. Most people, if this starts going green, no one's buying. I'm telling you, no one's buying. No one's going to be buying. What idiot's going to be buying Bitcoin at 30K when it was just at 15 and the macro looks so bad, which it will look bad here. It's going to look so bad. There's going to be people losing their jobs. Everyone's going to be talking about the Fed pivot, but US stock market's going to crash. Things are going bad. That's actually what's going to happen. It's never going to look good, man. Ever. Ever, ever, ever. So, going back, you see Miles' portfolio, right? 86%. It's not unique. Everyone has that. So it's telling you. Look at the market. We've got a language here, right? You got to just get your satellite open. The market's telling you everyone's on the sidelines. How are they going to react? In my opinion, just what I'm feeling, with this higher low in Ethereum here, this is the Ethereum chart, I'm just kind of smelling that all those sidelined people are kind of going to skip Bitcoin and they're going to want to start degenning into some crazy stuff. That's what I feel. But this is just guesswork. This is no guarantee. Right? So, what do you do from here? You're listening, you think, okay, what did you? Just make sure, man. If you have job, DCA weekly, bi-weekly in your ratios. So your ratios could be, I don't know, maybe you want 30% Bitcoin, 50% Ethereum, 20% Chainlink, whatever it is. Whatever your ratio is, just get exposure weekly, right? If you don't have job and just have your allocated crypto, hold strong network effect coins. That's all you can do, man, because you don't know who's going to rally first, who's going to rally next. And I'm telling you now, most people are going to miss out. You know, my last point, Alameda went down. So Alameda equals wrecked. And we're going to have a red background here to signify wrecked. And there will be a bomb. Alameda got wrecked. Alameda were a giant market maker. All the big guys in crypto, they pulled their liquidity. I can see it. If you go trade, I day trade. I can see all the market makers. The market is so thin. This reminds me of a specific point in time. Let's go back. Let's go back to the Bitcoin chart. This reminds me of a specific point in time when it was very low liquidity. I'm going to change it to a normal candle. It was actually right here. It was actually right here. So, for some reason, someone did a God candle here and sent us up, and the market got really thin up here. You know why? I'll tell you why. You see this 6K level? It broke. It just broke everyone's paradigm. Nobody thought we'd go above 6K. I didn't think we'd go above 6K for the whole year, and Bitcoin did. And suddenly up here, it was like some big giant circus. The book was pulled. But this was more difficult than now because the book only pulled after the God move. But I'm telling you right now, I'm not pretending to be some genius. We know Alameda's gone. The book is already pulled right here. The book, the liquidity, everything is thinner. When we go up, there's less guys selling. That's what a thin liquidity means, you know? Maybe $100 million sell order used to sell, or buy order used to move us like 5%. Now 100 million might move you like 10%. And as this accelerates, you're going to see it continue to get more thin. So this ties in to now when you see people with like 50%, 80% stable coins, you got to think of that as a collective mindset of everyone. And you have to think, all right, okay, maybe Bitcoin does go to 10K. You know, maybe it does. Maybe we go down and we crash. We pay for our sins. Maybe it does. Maybe it's bad. Maybe it does. But that's one scenario, okay? That's scenario A. All right, what about scenario B? Scenario B where we go up. You have like every single person sitting on the sidelines with stable coins ready to go in. All right? So if they see Bitcoin moving up and they see Ethereum moving up, they're going to be chasing altcoins. They're going to be chasing something. And yes, the word chasing. There is no world where the market goes up and everybody's like, I will have a diamond hand and I will live my bid down here at 10K. This world doesn't exist. You think it exists, but it doesn't exist. What you're going to find is people with bids down here as the market goes up. As soon as some mildly bullish narrative comes, they're going to just start moving up and start attacking the offers. Attacking the offers means they start dragging their bids up. And this is going to be very painful. So that's why I'm saying, you get in now. Dollar cost averaging in, when you DCA, you accept this damage happens to other people who are gambling up and down and around. You're still playing in this little time frame, man. That's why the ultimate goal is, if you just say, hey, I want to get to this magical banana 1 year after the Bitcoin halving. The people who are aiming for this, you don't have to do much except, hey, I'm going to put in as much money as I can, and I'm just going to wait. Those are the people who make it to the end. Because these people, they're going to get screwed, man. I'm going to make money, and so other people are going to make money, but 95% are going to get absolutely destroyed again and again and again because they're trying to time it. And all those people saying they have stable coins, 50%, 80%, they're going to go back in hindsight and say, yeah, I deployed this and that, you know? So, until next time, friends, I hope you get the message. Remember, like, subscribe, bell button, all, and I'll catch you next time.